Welcome to the Riskwiser Zone, the podcast where we dive into the world of finance and help you make sense of the markets. I'm your host, Lewis, and I'm glad you're joining us today. As we start this episode, let's take a look at what's been happening in the mortgage market. The Federal Reserve recently cut its benchmark rate for the first time since last year, and many people are wondering if this will lead to further drops in mortgage rates. But is that necessarily the case? According to recent news reports, mortgage rates have been declining since late July, with the average 30-year mortgage rate at 6.35% last week. However, experts caution that a rate cut by the Fed doesn't always translate to lower mortgage rates. In fact, some analysts are saying that while the Fed's move may provide some relief for borrowers, it's not a guarantee that mortgage rates will continue to drop. This is because mortgage rates are influenced by a variety of factors, including economic data, inflation expectations, and market conditions. So, what does this mean for home buyers and homeowners who are looking to refinance their mortgages? Should they wait and see if rates will drop further, or should they lock in a rate now? We'll be exploring these questions and more on today's show. We'll also take a look at some of the unique rate lock programs being offered by mortgage lenders, which can provide borrowers with some flexibility and protection against rising rates. It's an important topic, and we're here to help you navigate the complex world of finance. So, stay tuned for more insights and analysis on the Riskwiser Zone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where the Federal Reserve's latest moves are making waves. The Fed has recently cut interest rates, and this decision is having a ripple effect on markets around the globe. To break it down, the rate cut is expected to lead to a weakening of the US dollar, which could have significant implications for international trade and currency exchange rates. This, in turn, may impact inflation and economic growth in various regions, including Europe and Asia. Some experts believe that the Fed's actions will create a tailwind for global equities, as historically, rate cuts have been followed by soft landings, meaning no recession. This optimism is reflected in the recent surge of global equity markets, with many key indices reaching new records. However, it's essential to consider the potential risks and uncertainties associated with this scenario. If the Fed fails to meet the market's aggressive easing expectations, we could see a correction in the stock market, not just in the US, but worldwide. It's also worth noting that the policy divergence between the Fed and other central banks, such as the European Central Bank and the Bank of Japan, may create challenges for these institutions. The strengthening of the euro against the dollar, for example, could complicate life for the ECB, potentially leading to further rate cuts or other monetary policy adjustments. As we navigate this complex landscape, it's crucial to remain informed and adapt to changing market conditions. We'll continue to monitor developments and provide you with timely insights and analysis. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're closing out today's show with a look at some significant developments in the global financial landscape. As we've been discussing throughout the episode, the Federal Reserve's recent actions have sent ripples across markets worldwide. The Fed's decision to keep interest rates steady has sparked debate among investors and economists alike, with some arguing that more aggressive rate cuts are needed to stimulate economic growth. Meanwhile, in Japan, the Bank of Japan is set to make its own interest rate decision, which could have implications for the global economy. The yen has been fluctuating in response to expectations around this decision, and traders are watching closely to see how it will impact currency markets. We're also seeing some interesting movements in the foreign exchange market, with the euro and sterling experiencing fluctuations in response to economic developments in Europe. The dollar, on the other hand, remains a key player in global trade and finance, despite concerns around the Trump administration's tariff policies and their potential impact on the U.S. economy. Now, let's take a look at what this means for investors. With so much uncertainty in the air, it's essential to approach the markets with caution. We're seeing a lot of volatility, and it's crucial to have a diversified portfolio that can weather any storms. As we wrap up today's show, I want to emphasize the importance of staying informed and up to date on market developments. Whether you're a seasoned investor or just starting out, it's essential to understand the risks and opportunities presented by these global economic trends. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution